So unfortunately, the death toll in Turkey and Syria keeps going up. It's currently at 12,000, and it was at just 7,000 yesterday. We were talking about it. Basically, they need to find and rescue as many people as they can because the longer it goes on, it makes it harder to find people. And this is a map here. You guys can see there were a couple of earthquakes if you haven't been following the story. One was a 7.5, another was a 7.8. And just to give you some comparison, again, we're talking about Syria and Turkey. The death toll is at 12,000. 9/11, which is the terrorist attack in the USA, was around 3,000 people. And to give an also idea of how does this earthquake compare to others? I was looking at this list of earthquakes from around the world, and it can vary. So like say, for example, in 2001, 20,000 people died in India. Probably the worst I see on this list is 316,000 in Haiti. That was back in 2010. But this one this big hasn't happened for a while. The last one would have been in Afghanistan over the summer. That was about 1,100 people. But just wanted to report this. I don't ignore these things, even though we focus on the markets and stuff. I just wanted to mention this to you guys. In the markets, used car prices are up. Essentially, let me show you this chart here. You can see they were declining for most of 2022, basically, and essentially sort of bottomed out a little bit and started to come back up. We'll see exactly what these do. But this is essentially part of tracking inflation. What is the cost of things? And it's been interesting because recently multiple Fed members have come out and said, hey, guys, you should listen to us. We're not joking. We're really serious. We're going to be raising rates because the stock market has been sort of, what's the right word to say, euphoric. When Federal Jerome Powell was saying inflation has peaked and we're seeing it come down. And even though his words were still cautious, the market was just like, oh my God, you guys are so awesome. We're going to be, rolling in the bulls soon. But the Fed is now kind of mad at the stock market, it feels like, because again, 4 people have come out and said that rates are going to be higher and longer than you expect. If you don't understand, basically what this is the FOMC, the Federal Open Market Committee, and basically there are 12 members of this thing. And they will meet every month or so to decide what interest rates are going to be and what central bank policy is going to be. And this affects your life because you're talking about your credit card rates, your mortgage, your auto loans, and overall the whole economy, as well as employment, because essentially when you keep interest rates low, it encourages businesses to borrow and spend and invest in their companies. When you raise interest rates, it makes it more difficult for businesses to do said things. One of the things that is going on as well is, each individual one is going to a different region of the country to tell said message that, expect more pain. So for example, this is Federal Governor Christopher Waller, and I want to read some quotes so you can hear the language for yourself. So he's saying, we are seeing that the effort begin to pay off, but we have farther to go. We're talking about raising interest rates here. And it might be a long fight with interest rates higher for longer than some are currently expecting. That means you, Wall Street. But I will not hesitate to do what is needed to get my job done. And this is moreover, he's saying here, some believe that inflation will come down quite quickly this year. He said that would be a welcome outcome, but I'm not seeing signals of this quick decline in the economic data, and I am preparing for a longer fight to get inflation down to our target. I want you guys to hear their language because they're trying to get people to believe them. This is another one, Fed Bostic. He's saying, I think rates are going to be higher, and this is a quote. It'll probably mean we have to do a little more work, right? And I would expect that it would translate into us raising interest rates more than I have projected right now. So it's so weird to me, Wall Street. And there's another one, right? I'm telling you guys, and Federal Jerome Powell came out as well. This is Kashari. Hot labor market signals more hikes needed, right? And more quotes here. It says, on inflation, there are hopeful signs, Kashkari said Wednesday. There's not much evidence, in my judgment, that rate hikes that we've been done so far are having much effect on the labor market. We need to bring the labor market into balance. So that tells me where we need to do more. So basically, he's saying hey guys, we need you to fire more people. The labor market's still a bit too strong. And this, we're going to see what goes on with this. I keep saying this all along, though, that the Fed is going to raise rates and keep them up there. And that's what the Fed says too. And the market, this is also part of the game, is you're trying to predict the future. And it's very interesting because there are some people on Wall Street that are actually betting that the Fed is going to raise rates to a much higher level than people expect. So, for example, this is the headline here. This just came out. Traders are starting to put big money on the Fed going to 6%. We'll see. I haven't seen any Fed person say that, and I will say, however, whenever the Fed comes out and talks, and you can see they're clearly talking in tandem, they usually try to give you the rosiest scenario possible. So when they're saying we're going to be raising rates and expect pain, rest of the year, that kind of stuff, who knows? Maybe that bet that 6% is going to be a real thing, and that'll be a real shock to Wall Street. Now, it's talking about shocks. It's actually really interesting. There was a poll out. You can see here it says, this is out from Gallup, half in U.S. say they are worse off, which is the highest since 2009. And I'd love to hear you guys' thoughts on this. If you, in your situation, if you feel like you're worse off now or not. But evidently, a lot of people feel like that. Basically, half of Americans. If you look at the chart here, you can see this. That there's definitely a divide. Okay, so half the people in USA think they're worse off. 35% of the people think they're better off. And when you divide that up by, essentially, you can take a look at this here. By income, it depends where you are. So if you're in a lower income bracket, only 26% of the people think they're better off, whereas 61% of the people think they're worse off. Opposed to, say, for example, if you're in the upper income bracket, 39% of those people think they're better off, whereas 43% think they're worse off. So I've been talking about this a lot in the channel. I think there's going to be a bigger divide between essentially rich and poor, educated and uneducated, and skilled and unskilled. So I do think this is going to be a thing. Especially also too, we're talking about, say, like, for example, the rise of AI and automation. Something I mentioned that's going to be taking a lot of people's jobs away. And also too, to be fair, that there is a, certainly the word they've been using, say, like, for example, at Meta is flattening. The idea is that you're decreasing the amount of sort of like chain of command that you have at a place like a Meta, to where, you don't really use managers anymore. Because like they said at Meta that if you're a manager, we need you to be coding, do these kind of things. So there's going to be sort of job cuts in white collar jobs as well, as we've already been seeing. However, it's not necessarily all doom and gloom. This was an interesting poll, and it was asking Americans, say, a year from now, how do you think things are going to be? 60% of people said they think better off, which is really interesting. And then 28% of the people said worse off. So people do expect things to have an uptick. So in defense of Wall Street, maybe they do got it right. We'll see. I just know what the Fed says. The Fed says they're going to be raising rates for longer and higher than you expect. Speaking of whether or not things are going to be better in a year, if you ask Adani, he's over in India, I would say he's probably thinking next year is going to be terrible because this year's already pretty bad. Or maybe he's thinking it can't get any worse. But this was an interesting article. They were saying like he had margin called on like $1 billion loan, which is like unreal. And so like I guess he had to like send in half the money, which is $500 million. I don't know what's going to happen with this thing. My understanding, at least what people wrote in the community, and I've read about these things before. Right? Hindenburg came out with a report that said his basically like all his companies are 85% overvalued. This was the richest person in Asia, and it's crazy that you could have corruption at this high and at this scale. And I remember the title report was like the largest fraud in financial history, that kind of thing. So or was like corporate history, but it is absolutely unreal. Regarding big companies as well, this is an interesting one. So Microsoft, as you guys know, they were looking to buy Activision. Activision was one of the Warren Buffett stocks. And so I don't know if he had information on that or not. Who knows? You always wonder about that kind of stuff. But in the UK, they're looking to block it, saying basically this would hurt gamers if Microsoft were to buy Activision. And they provided a couple of solutions. So for you video game people out there, I'd love to hear your thoughts on the solutions that has been suggested. I will put it that way. So one would be to make it so that Microsoft could buy Activision, would be for Activision to sell off Blizzard, which is really interesting. So basically, you're going to allow the purchase, but you're not going to let the purchase be as good. And then, in fact, in my opinion on that one would be Blizzard would then probably revert to making good games again. When I was a kid, that's like Warcraft, StarCraft were like the coolest games like ever, like really ever. They were really, really cool. And then ultimately what happened was when they got bought out, they became more corporate and just focused on putting out sequels and stuff like that, and kind of lost their creative edge. And so I think Blizzard would actually be improved. The other option would be, this is an interesting one, would be to force Microsoft to make sort of their exclusive games like Call of Duty and such available on PlayStation. And I think this is an interesting solution because, from a sort of a company point of view, and you guys know this is where, you buy PlayStation and they have exclusives, and you buy, Xbox, they have exclusives. You buy, say, for example, Nintendo, they have exclusives. Like, what if, for example, you made Nintendo have to give Mario to the other platforms, right? I remember it was big news when I think Mario was on iPhone, that sort of thing. And so I can see from Microsoft's point of view, they're like, no, you're not getting Call of Duty. That's our game, because it's sort of, you need an incentive for players to essentially choose your platform over the other. However, to be fair, I do perfectly understand that it reduces competition, hence / monopoly, as we're talking about here. If you just have these big companies buying up all the game studios, then you just only have like a couple choice of platforms. So I totally get that. And this is something, sort of why we have regulations in place. Otherwise, companies would just essentially dominate. and essentially they do already, but, even more so. And speaking of domination, Chipotle is still making money. However, they missed on their earnings report. So I want to make this clear. I always have to emphasize this over when we talk about this sort of thing. Is sometimes you're reading the headlines, so-and-so company beat on earnings, so-and-so company missed on earnings. And then the stock does say maybe opposite what you think of it does, and you don't really quite understand what's going on. So the basic gist of it is that Wall Street's always trying to price the future of a company's, profits, essentially, right? You're buying something because you think it's an investment into the future of what their future earnings are going to be. It's essentially what it is. And so when something misses, it just means it misses expectations. So I can just tell you, Chipotle is making money. They are making money. In fact, they're saying here that they're going to open up 255 to 285 new locations this year. They're looking to hire 15,000 more people. So Chipotle, like they seem to be going gangbusters, just that maybe not as, gangbusters as, Wall Street had expected. Just to give you an idea of some of the numbers, it was just really, really interesting. So like the revenue is up, 14%, something like that. In-restaurant sales up 26%. Digital sales up 34%. Now, remember, we're talking about that's just sales. It doesn't necessarily mean that their earnings are going up, right? So when you talk about, like, say, their earnings and stuff like that, I was looking at this. They were saying diluted earnings per share, 39% increase. So that's actually pretty good, bigger than 29. And the other thing too, which I think is definitely worth mentioning, is you have to think about some of these companies and like, for example, we'll get to this one here, Uber. Uber had a decent earnings also, but you have to think about what is it compared to, right? So when you compare, say, for like, say, 2022 to, say, 2021, right? For example, let's say all your restaurants are closed and suddenly all your restaurants are opening in, or for Uber, for example, let's say no one is traveling anywhere, then suddenly everyone's traveling. It looks like, right, that you had a massive increase, which you did, but you have to take into account that they might have been, up before, then down, and then up again. And so this is sort of why stocks do crazy things, is because you're always going on comparables. And one of the toughest challenges going into the future is that because many companies, had really good gains in terms of, like, sales, revenue, et cetera, from, say, 2021 to 2022, going in from 2022 to 2023, comparing, right, they're not going to have the same kind of growth. And also, too, it depends if consumers are going to even have any money to shop at just your said company. And speaking of shopping, you guys got to see this. It's really funny. It's really fun. I'm not kidding. This is in New Zealand. There was a drug bust, and they found a whole bunch of cocaine. It's like the largest cocaine bust in New Zealand history, and they're calling it the Batman, like the Batman labeled cocaine haul. You can see it right here. And the reason why they're calling it the Batman thing is that the the drug dealers, they put Batman symbols on their packages, and also four-leaf clovers. So I didn't know this because I'm not in this industry, but evidently, I guess when you're kind of shipping these drugs, you put a trademark symbol on there so they know sort of where it's coming from and that, it's of the highest quality, etc. It was like 3.2 kilos. And what's even funny, you got to read the quote from New Zealand. They're saying, this is from New Zealand, this is the largest find of illicit drugs by New Zealand agencies by some margin. That's coming from the police commissioner in New Zealand. And then also, too, he says, it is more than New Zealand would use in 30 years. So they basically found like 30 years of drugs just floating around in the ocean, which is really funny. Who knows what's going on with this? And I actually was kind of curious myself, like, how much is this worth, etc. So I'm going to guess it's worth around $100 million. And I'll tell you how I get these numbers. Evidently, when you're talking about tons, a ton is about 900 kilos. Because I guess when you buy this stuff, you buy it by the kilo, okay? And learn something new every day, right? And this is something that I didn't know. This is a true story here. You got to look at this stuff. I guess the price of cocaine varies on depending on what city you are in the USA. I guess it has to do with shipping costs, right? Because if you're on the coast, I laugh because this is so funny. I didn't know this stuff. If you're on the coast in California, say, it's 14,500 a kilo. This is what I Googled. But then if you're in Boston, it's more like 29,000 to 39,000. And then if you're in Ohio, it's like 26,000 to 33,000. So it's really fascinating, like, what the price of a kilo is. And here's the thing that's really interesting. If you're addicted to this stuff, and this is sort of, if you ever wonder where rock star movies or pro athlete movies, like those kind of people that just party it up all the time, like, that kind of person. Not that I'll do it, but I'm just saying, that kind of person. They were saying that you can spend 170 grand a year on this stuff. So it's an expensive hobby. Don't do it, kids. It's too expensive. It's dangerous. And even if they have the Batman symbol, I just don't think it's worth it. So that's my message for today. Don't do drugs, kids. Stay in school. So anyway, love to hear your thoughts on any one of these things we talked about today. And I'll catch you guys in the next video.